Let's delve into the first commodity. From gold ETFs to gold stocks to physical gold, investors are now looking for an alternative in terms of what we're seeing in the precious metal space. Of course, gold definitely being top of the agenda. We've also got much higher inflation on a global level and rising debt levels as well. Gold being one of the favorites, it seems, over the past while. Simon and gentlemen, thank you so very much for joining me on Hard Stocks. Let's start off with you, Simon. Have you got a SWOT analysis for gold?
Well,
Were
for
you
gold,
able to put one together?
All-time high 1575.79. You told me that a moment ago.
Yeah.
And if it had kept in place with inflation, it would be about 2,300. Paul, I want to jump to you first. I was doing some digging and discovered that 2010 investment demand for gold exceeded jewelry for the first time ever. Apparently, the report I was seeing, that must really be one of the almost, I want to say, crowning glories, but proof that gold is maybe coming into its own as an investment product and no longer just by the sort of the crazies used to hide it under the bed for when the world ended.
Well, you just have a look back over the last 10 years with the first creation of the ETFs and the growth of the investment space. Gold is on the radar screen of a lot of investors. It was definitely off the radar screen for a considerable period of time in the 1990s. So yeah, the answer is yes, investment's key. Will continue to be a key driver of gold going higher, and jewelry has withered on the vine.
Is that because of price? Because I was always hear about the Indian housewives who wouldn't buy above, I heard they wouldn't buy gold above 450. Well,
it's an interesting point. If you look at the GFMS data on this, and if you were to deconstruct the jewelry space and actually allocate investment motives behind the jewelry purchase, then the investment drivers of gold are even stronger than you'd see from the headline GFMS data. It's difficult to deconstruct that jewelry flow into an investment versus an adornment motive. But if you did, it's bigger, and in fact the gold market is only about investment at the moment.
Okay, Kobus, let's get a sense from you in terms of where you think gold is at and where it's headed. We know that during the crisis, when gold was meant to take on that safe haven status element, it seems that most people were rushing to the dollar. Why didn't we see gold hitting new all-time highs then, unprecedented levels that we're seeing right now?
Yeah, look, I think at the moment it's very odd. I think if you go back at certain points, I guess way back to the 60s, and you sort of take it through. At certain points in the economy and in the cycles, I think people bought gold for different reasons as well. And obviously, as we moved away from the gold standards, there was a general feeling that you can't eat gold. Why do you want to have it? Why do you want
I know that Simon still believes that, right?
You certainly can't eat gold.
This is why he doesn't buy
this is not true. The Indians eat quite copious amounts of it, I might.
Okay, true. I have it in my Zambuca.
I
have gold flakes.
Gold flakes and the Japanese.
But Kobus, one of the things, you work for Stanley, a traditional investment house, and traditional asset managers, firstly, there's no carrying cost directly of owning a stock, and there's a nice little bit of capital flow. Gold's completely the opposite. You buy gold bars, you've got to hide them somewhere. That costs money. You don't get dividends flowing from them. Is there a broad sense in the asset management space of looking towards commodities such as gold and perhaps some of the others as well as investment?
I think a lot of the portfolio managers actually look at gold more as a diversification tool, and in the portfolio construction process. On an outright basis, and I think especially our gold shares, there's very little portfolio managers that I've met that are
and very few that I've met as well, and I speak to them on a day-to-day basis.
And obviously there is some support again for the physical metal, but I think in general, I think it's more from a portfolio construction perspective where there is some attraction.
But we shouldn't get ahead of ourselves in looking at the investment case for gold. Undoubtedly, it's been a powerful driver of higher gold prices, and our house view is it'll drive gold prices higher. Going back to your earlier point, have a look at what happened during the financial crisis. The gold price actually went down. And if gold genuinely is at the center of the investment universe, as some would have us believe, and it is the ultimate asset of last resort, why on earth did the gold price go down at that time? It does suggest that it's come onto the radar screen, but it's not at the core of the investment universe. And I suspect it probably never will be, again, at the core of the investment universe. It's an important diversifier. It speaks to your theme that at the margin, people are going to use this as a diversification tool, but it's at the margin. This is not a core investment strategy for most mainstream investors.
So what is driving gold right now? Is it because we've got high inflation and the US is printing money? Is it because of negative real interest rates? Or is it because we've lost complete faith in paper currency?
Well, I think, you know, there are a variety of different views on this. I mean, I said to you when I was on the show last week or the week before, you know, I think a lot of people have taken a view of the Fed Reserve position here and gone, have they lost control of this? Has the fiscal position reached a critical juncture where there's no road back? Now, there's a school of thought that that's the case and that you should buy gold because there's no ways the US can extricate itself from this crisis. And then you can turn around to somebody else and they'll tell you that there's an inflation argument, that we're going to go back into growth and inflation is going to be the bogeyman over the hill and you should buy gold because it's a good inflation hedge. You'll find people who will talk about, you know, systemic failure is still an option. People talk about the oil price going up. You'll find a multitude of different reasons for it. And there is no homogeneous single
There's
view.
one core underlying view, and it's fear almost in a sense.
No, I don't think it's fear. I think it comes back to the theme of negative real interest rates. People are looking for yield. And if you have a look at where the bond markets have been in US dollar terms, look at any of the major currencies, negative real interest rates have prevailed for the better part of the last 10 years. In the US, that's certainly the case. People looking for yield, where do they find it? Well, they went through the housing market, got stung there. They've gone to the bond. We've had an absolutely stonking period in the bond market. I mean, look at where they are. Look at where yields have been. So you've had that forcing down the yield, but the bond prices have been a great play for a while. And at the margin, gold has slowly but surely come onto the radar screen, as has silver, platinum, palladium. You left out palladium earlier on, an important metal in the PGM space. And that's where I think we're at the moment, is just that at the margin, people are moving into these metals because they're looking for yield. There is a good bull case for it, and there is momentum here. You know, I hate to talk about things like momentum that don't seem to have any real scientific basis, but there's undoubtedly a momentum factor at work here, and people are jumping on the bandwagon, which is also a worrying sign, one has to say.
Well, exactly, and I've always said this as well. When you look at what central banks are up to, and we know that Mexico is the most recent central bank to ditch dollars and buy into bullion. Does that mean that that we're looking at gold being sort of an overcrowded play at this point? Cobus, when you see that, does that sort of ring alarm bells for you, or do you think that more room to move to the upside?
Yeah, I mean, it's, yeah, to me it's almost, you know, the old saying when you go to your hairdresser and they're actually telling you you've got to buy this new hot thing and it's called gold. You know, you got to know you're sort of moving on dangerous ground. You know, I just see some areas in this space that makes me very wary, you know, and I think if you sort of look at investment positions currently sitting about 40% of total demand, you go back to 2000, it was around about 4%. Now there's very different reasons also now, you know, personally I think it's got a lot to do with dollar weakness and maybe some sort of distrust, which Paul sort of touched on earlier, in terms of some federal systems and you know how freely they can actually print money these days and actually just sort of deflate or dilute paper assets. You know, I honestly think there is people that are in that.
So you're talking about the fear factor definitely being quite strong.
Yes, and sort of a distrust and sort of the, you know, to say, you know, they can't trust the system, so to speak. I think, you know, when you look at the US and you sort of talk to some of the retail people there that's buying into gold, I think they're very much into that, buying into that theme.
Yeah, almost end of world in some cases. I mean, certainly I've chatted with folks who want physical gold bars they can bury in their garden for when the world ends. I want water when the world ends.
Well, the interesting thing, you know, to come back to your point about, you know, who's actually buying this metal, and there is a different product for a different risk profile, if you like. There are the people who are buying, you know, the shotguns, the tins of baked beans, and the gold
bars,
and they believe that, you know, it is the end of the world as we know it. And then you'll have a look, you know, through the spectrum to the people who are buying, you know, more speculative positions in gold through futures, through an OTC options contract, and they're just taking a punt on volatility. So there's a whole spectrum.
They're almost trading it. I mean, whether they're trading corn or gold or palladium. They're looking for something to trade. They're looking for that momentum, for that volatility.
Well, and therein lies part of the danger signals are there. I mean, I'm still very bullish on gold, by the way, but I think you start to see the danger signals when there is just that kind of momentum buying. Is it corn? Is it gold? Who cares? I'm just buying it because, well, I read it. I can't put my money and earn interest anywhere else. I'm certainly not going to buy equities because I think they're overbought. What am I going to do? I'll take a position in gold, and it doesn't take a hell of a lot at the margin of your Joe average investor in North America or Europe to do this, to start driving the prices. Now, in relatively liquid markets like silver, I know you want to come into silver later, that can have a disproportionate price impact. I mean, the gold market is actually a remarkably deep and liquid asset class. $100 billion a year of investment flows into gold is what's required to keep the gold price where it is. That's not a trivial number. People always tell me, 100 billion, people always say to me, oh, well, 100 billion is small relative to the trillions of dollars in the equity space. I'm going, have a look at things like IPOs, new investment flows into equities, for example. $100 billion ain't trivial.
Co is raising 11 billion. You think that's a big number?
Exactly.
Well, I would like to touch on Paulson and Company buying into Anglo Gold Ashanti. We've got a lot of news that George Soros is selling out of gold. We've got a lot of sort of speculation coming to the fore. How do you read into the market at this stage, Paul? And you're saying that you're very bullish on gold. When you say bullish, what are we looking at? 1.6, 1.7?
No, it's going to go above $1,600. I mean, that's, in my view, it's a given. Even though we're trading at closer to 1,500 at the moment, this is a brief pullback. You'll see it go
Should
higher.
we be paying attention to what George Soros is doing? And
well, I think, what is George doing? Well, I have no idea. He may be buying, he may be selling. The key issue is that you can see from the price dynamic that some people have exited the market. The key thing to remember about gold, silver, platinum, palladium is you need new inflows every hour of every day to keep the price where it is. So even just pullback, this is not necessarily even selling. For the gold price or the silver price to drop, it just means that people have stopped buying. They don't have to be selling. So George doesn't have to be selling.
And then what happens when the easy money disappears? QE2 ends, we don't get 3, etc., etc., and we don't get that 100 billion a year coming in. Then suddenly the whole
dynamic of the gold market and the silver market gets turned on its head. That's when you really have to look at the real fundamental underpinnings of it, which is why if you were to take a platinum play, you look at platinum as being a much more positive thing, or palladium versus gold, because there is this, dare I say it, genuine fundamental underlying industrial use.
So Kurs, I know that you could offer us some insights into what we could be doing playing these metals. Let's touch on gold. How would you get exposure to gold at this point?
Yeah, I would definitely sort of try and get dollar gold exposure. I think, and like we've seen, even though the
rand gold price isn't
the
done very
rand gold
much.
price is also always got that sort of that negative correlation. It's very seldom that you see both actually. The rand appreciating against the dollar and the gold price going up.
Can I interrupt at this stage and say, why has the rand gold price not done much? It's because South Africa has positive real interest rates.
Yeah.
Look at all, why has the gold market actually not done well? I mean, in terms of investment flows in South Africa. Hell, you look at the market, you can get, what are real interest rates in South Africa at the moment?
Probably around 1.5% or so.
Yeah. So you've got
actually make some real money.
But that gap is closing very, very quickly, though. We've got rising inflation as well. I mean, depending on when you look at the core inflation or the overall inflation figure, and we've got a repo rate which is currently sitting at 30-year lows of 5.5%. So. Interesting to see how that plays out. Yeah. Simon, looking at gold futures, I know that you look at those. Yeah,
there's a bunch on the JSE. They've got commodity futures and at gold, and actually they're back into NYMEX, so it's the real deal. But to Kobus's point, you're trading in rand, so you want to get a little bit clever. You want to take a long position in gold, and then you want to take a currency future and remove that currency and basically go short the dollar. So you've got, short the rand. So you've got a US dollar position, and you removed rand from the equation.
So Paul, gold, hot or not?
Hot.
Hot.
I would say not.
Not hot. So not you would be buying at
maybe
these levels.
Too hot.
Maybe too hot. Okay. Okay, Simon.
I mean 1600. Sure. I got my Pyrex here, my Fool's Gold. I quite like that.
Yeah, show it to the viewers. Here we go. Alternative gold, if you like.
Is it going to 1600? No doubt. Maybe even 18 or 2000. I worry that this is going to end in tears one day, and our owner will be left holding the bucket.
Well, I've been on the record for a long time. One of the reasons people think I'm still a bear on gold is because I say there is this end game. Yeah. But in the near term,
near term it's going up.